You might have heard that you should be investing in index funds or ETFs, and you might not have any idea how to get started, but you know it's something that you should be doing. So in this video, I'll be breaking down exactly how you can start investing in ETFs as an absolute beginner and some key reasons why you should be investing in index funds or exchange traded funds. Hello, my name is Rachel and welcome back to the channel. In this video, I really want to show you just how simple investing can be, because I know often investing can sound very, very scary because it is seen as very risky. However, the type of investing that I want to talk you through today is very simple and very easy to get started with. So one of the key reasons that you should start investing any spare money that you have today is just simply to keep up with inflation. So just a basic example of how inflation works. Years ago, when I was a child, if my mum gave me 10p, I could go to the local newsagents and go and get myself a Freddo, and I loved those Freddos. If I had saved that 10p, put it underneath my mattress today in 2024, I would not be able to afford a Freddo because they are now 25p. So inflation simply measures how much more expensive a set of goods have become over time. So my 10p wouldn't have the same buying power as it did, say, for example, 20 years ago. In the same way, if you take £100 and put it underneath your mattress and save it for 20 years, you would still have £100 20 years later, but it wouldn't have the same buying power. However, if you had chosen to invest that £100 20 years ago and simply leave it and forget about it, at an increase of 9% a year, which is a very realistic rate to see in the stock market, your £100 would now be worth over £600 20 years later because you had simply chosen to invest it. Also, it is likely that if you're paying into a workplace pension, then the money in that pension will be invested for you. So you might already be investing without even knowing about it. So investing certainly doesn't need to be scary, and you also do not have to be an expert at all or understand the stock market in a lot of detail to start investing. This is often a barrier that I hear time and time again. I think when people imagine themselves investing in the stock market, they imagine themselves on the phone saying buy and sell with thousands or hundreds of thousands of pounds, but this is simply not the case. You can now simply invest a very small amount of money, and if you're investing into an exchange traded fund, which is simply a basket of different stocks rather than having to go out and buy different individual stocks, then that is a very, very simple and cost-effective way of investing. So we'll go into more detail on exchange traded funds later in the video and go through some specific examples of exchange traded funds or ETFs that you could choose to invest in. So the first thing that you want to do if you're starting to invest in the stock market is make sure that you have opened up a tax efficient account. So for example, here in the UK, you can open up a stocks and shares ISA, or the equivalent in the US is a Roth IRA. So these are simply accounts where any profit that you make or any money that you make from capital gains or dividends is not taxed. Now, there are many different options for stocks and shares ISAs here in the UK. There are options, for example, from Trading 212 or Invest Engine, where you are paying no fees, or you can go with a company, for example, like Barclays, Hargreaves Lansdown, AJ Bell, where there are some fees. I've done a separate video on stocks and shares ISAs, which I will link here, which you might want to watch at the end of this video, where I go into much more detail about the customer experience and also the different fees that are applied to your account. So if you want to take a look at that, then you can check that out afterwards. So hopefully now you're feeling excited about investing. You've opened up a tax-free stocks and shares ISA if you're in the UK, or a Roth IRA if you're in the US, and now you are trying to decide what to make your first investment in. Now, I would say for absolute beginners, one of the best investments that you can make is in an exchange traded fund. So the majority of my investment portfolio is in exchange traded funds, around 70% of my portfolio at the moment. This is simply because these are passive investments that track a specific market. So there's no space there for human decision. You're simply tracking a specific market. And they are also very, very low on fees. And fees are really important when you're thinking about investing. It's very important to look at what the fees are and to make sure that they're nice and low so that that money is really not eating into your investment value. So I choose to invest in ETFs because they are very simple. They provide a diverse portfolio, and also they have very low fees. Now, if you're thinking of having the most diverse portfolio of all, the best option for you might be investing in a FTSE All-World ETF. So that is investing in companies that are spread across the whole world. So an example of an ETF that you might look to do a bit more research on, and please always do your own research because I am not your financial advisor, so please do your own research and make sure you're comfortable with any investment that you are making. So if you're looking for a FTSE All-World ETF with a low fee, you could look at Vanguard's FTSE All-World. This is a well-established ETF that simply tracks the world market. So in the last year, it has returned 16%. So that just means that whatever you'd invested a year ago would now be worth 16% more today. So when I say that this ETF is simply tracking the world market, you might think, well, what exactly is this ETF made up of? And it's actually made up of 3,479 different stocks. And you can actually see each and every one of the different stocks that is included in this ETF. So when I say that when you're investing in a basket of different stocks, with this ETF, when you make one single investment, you are getting 3,479 different holdings within that. So you're not having to go out and buy a little slice of Tesla, a little slice of Apple. You're simply investing in one investment and you are getting all of those different stocks within it. So you can see all of the different companies that are in this ETF and their weighting. So for example, Microsoft is your top holding in this ETF and 4.2% of this ETF is made up of Microsoft. Then you've got Apple and then Nvidia, which is a semiconductor company if you haven't heard of them. And then in terms of regions, as I said, this is a diverse all-world portfolio. So North America makes up 58% of this ETF, Europe excluding UK makes up 11%, Japan 6.1%, Asia excluding Japan 5.2%, and emerging markets 5%, with the UK just making up 3.7% of this ETF. Now you can start investing with very, very small amounts. You could even start investing with just £1 with some of the different stocks and shares ISA providers. But say for example, you have £100 spare a month. So you start off with £100 and you invest £100 into, say for example, a FTSE All-World ETF. And say you do that for 24 years and don't take any of that money out, you'd actually have a whopping £102,000 in that account 24 years later, and that is with a rate of around 9%. Now we can see that actually the FTSE All-World has performed better than that in the last 10 years. As I said, it has actually achieved an 11.65% annualized return over the last 10 years. However, I went with 9% because it's a more conservative figure. I also wanted to take into consideration any fees or ongoing charges that you might be paying. So of that money, over £73,000 of it has come from interest. So that's not money that you have deposited, that is simply coming from the investments that you have made and left to sit there in a simple ETF without having to buy and sell. You can even automate this, so you could invest regularly on a monthly basis and automate it, so you're not even doing anything, and 24 years later, you've made £73,000 in interest, which is simply phenomenal. Now, of course, there are lots of different versions of ETFs that you might want to invest in. You could, as I said, invest in the Vanguard FTSE All-World, or there is an Invesco option that is very good as well. I'll put a separate video up here where I compare these two different all-world ETFs. You could also choose to go a little bit rogue and invest in ETFs that have had some very, very strong returns. If you want to check out this video on ETFs that actually have beaten the S&P 500 in the last 5 years, then please do check it out. But please do your own research and make sure that you feel really confident and comfortable in any investments that you are making. So I personally choose to invest on a monthly basis, and then any money that I might have from specific bonuses or anything like that, I will invest in a lump sum there and then, because time in the market is often better than trying to time the market. So if you are investing on a regular basis, say for example every week or every month, if stocks are rising, then you are buying them at a higher price, and if they're falling, you are buying them at a lower price, and over time that will simply balance out. So I just wanted to cover it very quickly. You might have seen in a lot of videos that potentially you could invest in the S&P 500. The S&P 500 is the 500 biggest companies in the US, and that is a brilliant investment, and it has done exceptionally well over the last 5 years. And even in the last year alone, it's brought in 23%, which is obviously more than the FTSE All-World has. However, if you are investing in the S&P 500, you are getting just US stocks and not all all-world stocks. And potentially, I think with an all-world ETF, you are getting a greater variety of stocks and you are getting that spread across the world. So by investing in an all-world ETF, you are getting a much more diverse portfolio. Yes, 58% of it is currently US stocks, but the rest of it is stocks from throughout the world. Whereas if you're investing in the S&P 500, you are just getting US stocks, and potentially the US market might be a little bit overheated. It might not be, it might continue to do really well. But I have personally decided to recently make investments in the FTSE All-World rather than the S&P 500, simply because I prefer the diversity that provides. However, please do your own research, go away, have a look at any other ETFs that you might think look really, really strong. Always check those fees and take a really good look at past performance, but always remember that past performance is not always indicative of future performance. So if it's done very well in the past, who knows if it's going to continue to do well into the future. Thank you so much for taking the time to watch this video. I hope you found it helpful. If you have, please give it a like with the like button, and if you fancy subscribing, that would be absolutely awesome. I have been blown away by how many people have been subscribing in the last few weeks. I was kind of sat with just over 3,000 subscribers for quite a long time, and then in the last few weeks it's gone way up over 5,000, which is absolutely brilliant, and I really appreciate it. And I hope you enjoyed the video. Have a lovely day. Bye bye.